Hi, and welcome to another daily recap. So, today I'm going to recap October 8, 2024, Tuesday, and it's day 111. So, to summarize today's analysis, I'm going to tell you that there is no trades today on both EU as well as GU. So, before knowing why there is no trades, so we must see what happened, what fundamentals is there today. Actually, there is no news today, so the price action either can be consolidative or it can be expansive based on the current market sentiment. So let's jump into the whiteboard and see what the market did on this day. So this is the daily chart of the euro dollar. Let me take a pen. So the swing structure is bullish, internal is bearish, and same thing like yesterday. Price is still in this daily demand and it didn't take out the daily target. But what I saw is today price actually swept the previous day high. So having swept the previous day high and having filled the sum of the imbalance here, I can expect the price to be bullish. Price to be bearish and take out the sell side liquidity. Price moves from liquidity pool to liquidity pool. Since the buy side liquidity has been taken, so the next target I can expect it to be the sell side liquidity that is really target. So coming into the 4-hour chart, 4-hour, the swing structure is bearish, internal is also bearish, and there is a kind of low resistance liquidity being accumulated. So this gives me more confidence that shorts can be high probability today because of this low 4-hour low resistance liquidity as well as the daily sell side liquidity and price of the buy side liquidity. So everything is adding up, and I'm so confident that the shorts are gonna be the main focus today. So coming, this is very zoomed in version of the 4-hour chart or reference, and this is the H1 chart. H1 swing structure is bullish, the internal is bearish, and yeah, price actually swept this high. Probably let me zoom in so that you can. Yeah, actually price swept the high, and it swept this high, swept this high, and this candle high is being swept by the Frankfurt Open. So there is high chance that the price after sweeping the buy side liquidity can chalk bearish. Once the price chalks bearish, a fresh POI will be formed, and I can happily take shots from this fresh POI, targeting the all the sell side high time frame sell side liquidity below. So that's the game plan. Very simple, very easy, and you know less complication. So and yeah, price actually chalked bearish. Price chalked bearish, but I'm waiting for the 7 a.m. candle to finish printing to take shots. So if this candle was strong bearish candle, then this would be a good POI I can look to trade with. But you'll know in the next upcoming slides. Price actually chalked bearish, but with a strong demand coming stepping into the market, this is not a valid chalk that I was expecting. I was expecting something, a candle closure that would be much more efficient. And one more thing, this is not actually a chalk because price came up, came down, and then it pushed up. Price didn't go up and then it didn't push down. Price came down and it didn't push up. So it will be simply like pull, run, run, pull, run. That's it. Suppose if this was a white candle, which means a bearish candle, then I can say the price has went up and then it pushed down, which means this is good. Which means I can say that the price pushed up and then came down, went up and then it pushed down. If this was a bearish candle, but since it's a bullish candle, price this would be the opening price. Price went down and then it pushed up. You can see this clearly in the in 15-minute chart or 5-minute chart, but since I'm well versed with 1 hour chart, I can easily see this in the 1 hour chart itself. So there is no bearish chalk, so I'm waiting for the price to chalk bearish before taking shots, which is high probability today. But unfortunately, you know, a strong bullish momentum came with DXY, and then price pushed up. So again, my I need to change my bias from bearish to bullish because I know that there is a lot of resistance here and there is a daily target here, and this demand could be easily flipped, and then I can trade off this flip zone. Everything is fine, but that is expectation. That is expectation. But currently, what is happening is price is bullish and the demand chain is getting respected. So I must focus on that rather than forcing the price to go bearish. Just follow the bullish order flow. That's it. So this is actually phase C, and I can trade the phase C because this is actually a news candle, and there would be a ton of buy sell liquidity accumulated above the news candle. So this can price can go steadily go up to take out the buy sell liquidity. Probably I can look to capitalize on this bullish move. So this is phase C condition, and the price is in non-OT, yeah, and high time frame supporting medium time frame area, it's not. So this box is not ticked. So medium time frame POI as 4 out of 8 criteria met. Let's check. It must have swept liquidity. Yes, it has swept liquidity. It has displacement. You can see the displacement here. It has made shift in the order flow. Yeah, it has made an IBOS, and it has unmitigated. Price didn't mitigate yet, and it is formed during the kill zone. This is London, and yeah, one, two, three, four, five, 5 out of 8 criteria met. So that is more than enough for me to take consider this POI as a good POI, and it is in line with the medium time frame order flow. That is main. That is a key point, and uh, that is that is also satisfied. So what are the other confluences? So we can see that the demand chain is getting respected here, and there is no opposing demand. I mean opposing supply zones. So price can freely move up. And one more thing is that there is a positive SMT with DXY. So that adds to the confluence. And price. One more thing is that price is still in the daily demand, right? If the price goes below this one, which means that the demand is failed, but still the price is in the daily demand. So the daily demand can be respected and the price can push up. That is one more point. And the risk factor is it is against the high time frame bias and POI not in the discounted internal range. Yeah, actually, if I take the fib from year to year, the 50% would come around here. So price can come below this one and tap into this extreme POI and then it can push up. So I didn't mention that risk factor here, but it is still a risk factor. Price can come to the extreme and then can respect this POI and then push it. Why? Because it has also swept liquidity. It has also got inducements, and it is not a proper displacement, but still it it is also a valid POI. So what happened on this trade? So what is the entry method? Obviously, there is no entry method. So the only entry method I can use is LC2A or LC, I mean, M15 confirmation entry. So did that happen? Probably not, because price. This is where the pullback started, and when the pullback started, price did not make a fake break all the way. So there is no trades, and price invalidated the POI, and this POI got invalidated. So the next POI will be this one, but I can't trade directly using this POI. As per my rules, I need to see shock bullish before taking any longs. I know this internal range is very small, but the rules is the rules, so I need to follow my rules strictly. So which did not happen. This is the POI. I didn't take the screenshot on that day. I just took it today because I forgot to take it. This is the POI that I was expecting the price to hold and push the price up, but unfortunately, price didn't mitigate. It was actually fortunate because price didn't mitigate this POI within the session. So once the candle finished printing, it was end of my session. So I didn't take trades using this POI. And one more thing is that after tapping into this POI, price needs to chalk bullish, right? So even that did not happen. So there was no trades. And as expected, price is going down, following my bearish bias, and it's going to take out the daily target. Yeah, it's going to actually took out the daily target. Yeah, you can see here. So it is what it is. Actually, I expected price to move during the session, but during the session, price swept some buy side liquidity so that it can move down to take out the abundant sell side liquidity down. So it is what it is. So I didn't get any trades on this day. It was an easy analysis. It was straightforward trade if the price aligned itself. So but it didn't align. So I was forced to not take any trades on this day. So yeah, it will happen. So definitely I will get at least 3 to 4 trades for EU alone in a month. So it will happen. I just need not force things. It will happen uh, at the end of the month. So that's it from EU. So let's jump into GU and see what happened on GU on this day. So let's continue our analysis with GU. And as I already told you, there is no trade on GU also. So let's jump into the whiteboard and see what the GU has for me today. So in GU, again, the string structure is bullish, the internal is bearish, and I can't say that the fractal is also bearish, but the momentum is strongly bearish. And I can say there is a kind of a rejection of this demand earlier, but it is a failed reaction of this demand, and price started to push down. So probably this is a liquidity sweep, and price can continue going up at least to take out this fair value gap. But let's not force things, and I'll say that the daily bias is neutral, and price can either come down to take out this strong swing low, or it can just consolidate and then push the price up to take out this weak internal high. So either of the thing is possible. So that's why I just mentioned the daily objective as neutral as of now. So jumping into the 4-hour chart, again, as seen in the euro dollar, the 4-hour has also built up low resistance liquidity, and there is a strong um supply zone here. So price can mitigate the supply, and once the supply is met, you can see there can be a low time frame confirmation, and price can push down, take out all the low resistance liquidity below. And I can't say that the price can take the strong swing low, but definitely it can take out this low resistance liquidity. So my target would be the low resistance liquidity. Simple. So this is a zoomed in version of the 4-hour chart. So now, and yeah, one more thing is that this low, sorry, yeah, and one more possible scenario is that this high actually failed to take out this low, which means this high is weak and can be targeted easily. So price can take out this buy sell liquidity before pushing down to take out the sell sell liquidity. So I must also keep that in my mind and trade accordingly. This is H1 chart. Swing structure is bullish, I mean bearish. Internal is also bearish. So this becomes a strong internal high, but in 4-hour chart, we were talking about this high can be taken out because this is a weak high and failed to close below. But in H1, it actually closed below. It actually closed below. So there is a less chance that the price will take out this strong high, because if there is an agreement between multiple time frames, then we can say that that has a high chance of the that event of occurring as a high chance. But since one time frame is not agreeing with the another, so there is a partial chance of that event being occurring. So I just stick with price tapping into the 4-hour supply, and then chalk bearish, and then taking out the weak low and targeting all the low resistance liquidity here. Let's not complicate things. So before taking out the sell side liquidity, I must see a buy side liquidity sweep, chalk bearish, beautiful POI, and then take shots. So simple. My game plan is very simple. So I was waiting for that. Or if the price chalks bearish directly, then if the price chalks bearish directly, but it did not take out the weak internal high, then I can still have some risk to reward here. Target the nearest POI, low time frame entry, and then boom, target the weak internal high. If the price didn't take the buy side liquidity and directly comes down, chalks bearish and high boss bearish, then there is no trades today. As simple as that. So actually price chalked bearish, but this chalk was not convincing for me to take shots, because once the price chalked bearish, there was a strong bullish push into the PY. So this PY becomes mitigated and it is not valid anymore. And actually price chalked bearish. So obviously there will not be any trades, because why? Because I was expecting the price to chalk bearish and then chalk bullish. Sorry, I was expecting the price to sweep some buy side liquidity and then chalk bearish. But if the price actually, if even if the price swept the buy side liquidity now, price needs to come all the way down to chalk bearish, so which is definitely not realistic. But if the price makes something like this, a small push down and then a push up, price would have swept the Asian high, tapped into the 4-hour supply, and then if it chalks bearish, then that would be a very very high probability trade for me to take shots. So let's see whether that happened or not. No, it didn't happen. Price actually chalk bullish, and it didn't make that chalk bearish, but still I can look for the price to go up. So this would be my chalk bearish line, and if the price chalks bearish, I can look for shorts. I am still hoping for that chalk bearish to play out, because shorts are high probability today. I was a bit interested in longs, but afterwards I then dropped my plan, because it was a kind of fear of losing trade, and sorry, it was kind of FOMO trade. So I just don't want to get involved in low probability setups. I just uh, you know backed off from this trade idea. So this is actually the trade idea. The trade idea was to follow the fractal structure of the H1. So fractal is chalked bearish, and there is some inducements here. So I thought that I can see the price can take out this inducement and then push the price further up to take out this liquidity and have a deeper mitigation into the 4-hour supply, but it's against my bias. So let's see. So it's phase D actually. So price is reacting off from high time frame supply, say high time frame demand. So there is a good, so one box is ticked, and this box I can't tick because uh, high time frame is not in support, to be honest, and other two boxes are ticked. So it's kind of a medium probability trade, but intuitively it's a low probability trade because I knew that there is an opposing supply which can, price can just tap into it and then push down, taking out my stop loss. So what are the other confluences? So it has swept the Asian eye and a strong sell side liquidity. So I was expecting the price to go up to take out this buy side liquidity. So it has a time-based liquidity to target, which one the London high, which is the buy side liquidity above this POI, and it was having a positive divergence with S&P, sorry, DXY. So all these confluences adding up, it gave me some confidence to take longs. But what are the risk factors? It is counter internal POI, not the most good looking. This is not the most good looking POI, and with the not in line with the high time frame bias. So I had this for a while, and this was actually the lid, and this is actually the balance price range, which I expected the price to tap into and then push the price up. And at this, there is a ton of low resistance liquidity here. So if the price takes out this low resistance liquidity, there is a chance that the price would target the next buy side liquidity that would be this high, and after that one, I can go break even and protect my capital. And also one more thing is that price actually swept a strong sell side liquidity, so price can continue going up to take out this buy side liquidity. So there was that possibility also. So I was looking for LC1 or LC2 or that's all. So yeah, okay, I think I didn't take the trade. Okay, December, I'll show you in charts itself. It's October 8, right? It's my mistake. I'm sorry. October 8. We go. Yeah, this is actually October 8. Yeah. Actually, price didn't come into the my POI. That's why I didn't mention anything. This is the POI and this is the balance price range that I actually marked it. So yeah, price actually didn't come to my POI within the session. So I had to leave the desk after 3 because I have some personal work. And actually LC1 didn't play out during the London lull. Actually price made LC2A and then it actually played out, but this is not the time that I trade. I would be rather having a good sleep at this time. So that's it from GU. There is no trades on this day. So I think I just pushed my, I was just, forcing trades, but fortunately I didn't get any trades on this day because it was a clear indication that I was pushing the trades because my initial bias was bearish and there is high time frame support also. What I must have done is I must have reduced the screen time on this day and did some other productive task and let the price action play out, come in favor of my direction, and then I could have taken the trade. But what I did is I just forced trade following the medium time frame order flow. And definitely it did not follow the medium time frame order flow, the price action, because you can see the price went down following my high time frame bias. So one thing I must make myself clear is that high time frame is the king and the medium time frame and the lower time frames are just slaves that are obeying the high time frame bias. So I must have a clear high time frame bias and then stick to that high time frame bias and take trades accordingly only when the medium time frame aligns with the high time frame bias. So that increases my strike rate. This is a very key lesson which I must learn from this trading day. Not only on this trading day, from the past 2 to 3 trading days, I'm doing the same mistake, and I must analyze this, realize this one, and not repeat the mistake and avoid potential losses. So yeah, that's it from this day. So overall, it's a good trading session with no trades actually. So see you tomorrow, guys, on let me check once on October 9, 2024, day 111. Until then, cheers, guys.